Good afternoon, traders. It is November 1st, and we are about 4.5 hours into trading today. It is just before the FOMC meeting. That will be tomorrow. So lots of speculation on what the Fed might do. Personally, I believe that they are going to signal a December rate hike. We've got the elections coming up in a week, so there's a little market uncertainty. And you can see the S&P 500 is down about 17 points right now, the Dow down about 100. Today, I'm going to give you a lesson on how to day trade and how to use some of the systems that we have to determine when you should enter trades and when you should exit trades. Probably one of the most common questions I get is how do I know when to enter the trade? How do I know when to set my targets? How do I know when to stop the trade out? So I'm going to show you my method, and we're going to use win. But before I do that, something I always preach every single day is market first, market first, market first. Every single thing that we do starts with the market. So I have to get my bearings on what the heck the SPY is doing, the S&P 500 depository receipt. Now we don't trade the S&P futures normally. I mean, there are some situations where we get into a very high probability setup where we will trade S&P futures during the day, but that might be 1 out of every 10 days. This is certainly not something that we want to do every day, and the reason for it is because we have an edge, and our edge is to find relative strength and relative weakness within the overall market. If my market analysis is correct on SPY, I can find the best components, be they long or short, within the SPY, and I can create a huge advantage for myself. So let's take a look at the SPY and what it's telling us right now. So here we've got all of the major moving averages. The heaviest pink line is the 200-day, 50-day is the lighter pink, and the black line is the 100-day. We're below the 50 and the 100-day. And more significantly today, we're breaking below 212, which is that horizontal support level right there. And you can see based on the long red candle that the selling pressure has been substantial. So yes, I do like shorting stocks in here because of the downward momentum, and we have lots of great stocks to look at, but the market has been in this tight trading range. We do have a sell signal by my system also on the SPY, so it'd be fine for us to short in here. Here are my issues, and here's why I don't want to short the market. Every little dip below these lines has reversed the next day, and we have an FOMC meeting tomorrow, which has tended to be very bullish for the last 2 years. Who knows what the Fed might say? They could come out and say, listen, we're going to raise rates in December, but we are not going to do another rate hike for at least 6 months. If the market hears that kind of news, it's probably going to rally. It'll say, fine, we'll take the medicine now, and we don't have to worry about another rate hike for a very long period of time. That's good news. Rally the market. The other reason I don't want to get short is you can see here that the SPY is at about, let's say, 211. Well, at 208, we have the 200-day moving average. That is a big moving average. Yes, we're 30 points away. That's not a big drop. This move could be very shallow. It could be very brief. We could dip down to it maybe on an intraday basis and then run like mad right off of it. So at this juncture, I'm not going to second guess it. I don't want to be short the market into year end. I'll tell you, over 25 years, every time I think the market looks like crap and it's going to fall, and it's late October, early to middle November, every time it looks like things are going to fall apart, and every time you're tempted to get short, the market finds support and it rallies into year end. So my suggestion is if you're tempted to buy puts in November and December, don't do it. Go to the sidelines if you were right and the market falls apart, at least you won't have long exposure. But if the market rallies and you got short, at least you're not going to take a beating into year end. November and December are traditionally very, very bullish months, and I would not suggest fading that move. So in that context, yes, the market's been dripping lower. We'll take a look at a 5-minute chart now, and you'll see, I'm going to take the major moving averages off. You'll see how this decline has been very steady. Now here's one thing you need to be aware of is, do you see how that support level was breached right there at about 212. Then we had a nice decline of about 8 S&P points. Okay, then the market compressed in here. Then we had a nice little drop of about 4 S&P points. And we had a nice little drop here of about 2 S&P points. The market is starting to compress. It's starting to find support here. As the market finds support, we don't want to be buying until it absolutely finds that support level, but you can put up studies such as MACD that will help you find those crossovers, and you'll start to see that support unfolding. I also have a study called 10 Squeeze, and that will also show you market support. So you know that when the market's compressing, you don't want to be getting short. You want to be waiting for that bounce. Again, I'm putting this in the context of day trading. So market's down, 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 but we're looking to play a bounce. Well, how do we play a bounce? I mean, you don't want to be on the wrong side of this if you're trading S&P. If you're trading S&P and you get short in here and you get one of those whoosh 5-point S&P rallies, you are going to have your head handed to you. Okay, these are very, very tough moves. By the same token, let's say that you buy the S&P in here looking for a bounce. If the bottom falls out and we continue to fall again, you're going to lose money. What we want to do is we want to find relative strength and weakness. So in here, I'm going to be looking for relative strength. What I'd like to find is a stock that's holding its own very, very well while the market is sliding. And I have searches to help me find those. One of the searches that I use is day bull. In fact, you'll see this in my chat room. So Win was just up at the top of the list, and I'm going to show you by overlaying the S&P 500. I'm going to show you the relative strength that we're looking for. So here's the scenario. You've got the stock gapping higher today. Stock makes a high, and we traded this early in the day and did very well with it. We bought this breakout right here. The stock compressed, market was continuing to go down. We had a breakout. We made a nice, I think it was about a 75-cent gain. Market was going lower, lower, lower. What am I going to hang out for? The stock is stalled. It stopped going up. I'm going to take profits on that trade. Why? Because of one of the reasons that I exit trades. Market weakness. Market first, market first, market first. We are trying to find surrogate positions that we can take that provide us with an edge. Relative strength. Stock up, market down, relative strength. Wait for these compressions, wait for these breakouts, get long. But if the market continues to drift lower, don't be an idiot. Take your profits, get out. I don't care if you've got 50 or 75 cents in it, it's money. And look what happens. The stock pulls all the way back, and we've got a couple of support levels that we can lean on. One support level for the stock would be down here. Never got that low. Another support level would be right here. Stock never got that low. Here's a support level. It was temporarily breached, and the stock poked below it. Okay, now it rallied back above it, and it's starting to compress in here. There's our little compression right there. Okay, so this is where I started to do a lesson for members. I'm constantly teaching traders how to do this, how to trade my system. It's actually quite easy, but here's the lesson. I said, look, stock is compressing in here, market's continuing to go down, and when we were right in this point right in here, it looked like the market had made a low and it was kind of going sideways. This gray line is an overlay of the SPY. So it might be time to get in here and take a position. It's exactly what we did, and I'm going to prove it to you because I'm going to show you the lesson I posted in my chat room. So I get long the stock in here as I'm writing my lesson, and it was at 98.40 is where I bought the stock. And I told members I'm not going to be hanging on to this for a big winner right now because the market has shown me that it's very, very weak today. But I am looking for an opportunity to play this bounce. If I get lucky and the market runs higher, I could have a really big winner on my hand. So I bought it at $98.40. I immediately put a limit in at $98.75. Why? Because I was just looking to make a nice little 35-cent trade out of this on a market bounce. Well, I get into the trade and the stock takes off immediately. I think it was at 98.60, let's say, and then I see this. I start to see the market fall apart. And I'm thinking, oh boy, I've got to have this on a very, very tight leash. So if the market makes a new low, I've got to bail on this trade. I put my stop in at 98.45 so that I could not lose money on the trade. Even if I stopped out, I would make a nickel on it. But I still wanted to hold out for that 98.75. And look at here. Here you go again. Look at what this stock is doing. It's at 98.11 right now. It's bumping higher while the market is falling apart. This stock wants to run. It wants to go. It's going to take out this high and it's going to continue to go. If we had the market working in our favor, the market just stalled. Let's say it just stalled, stopped going down. This stock would be up 50 cents. If the market reversed and bounced, like I told you, into these deeply oversold troughs, the market oftentimes can bounce 5 or 8 S&P points, no problem. If you happen to get on one of those trades, my God, this stock could be up $1.50 easily. That's what we like doing. Let's say that the bottom falls out of the market. Guess what? This stock has relative strength and it's not going anywhere. It's already shown us the buyers are lined up. They want to be long this stock. That's our edge. That is our trading edge. So you can be wrong on the market and still make money on the stock because you're in the right stock. And this is an edge I do not easily give up, meaning why trade the S&P 500 when I can find this kind of advantage in the overall market? So let me paint a couple of scenarios and let me reverse backwards because I want to get back to that timeline. I don't want to distract what's I don't want to take away from the lesson and have you look at what the stock is doing right now. So stock comes down here, shows us the support, bounces off of this level. We're above it, which actually I could use this as my stop very, very nicely. Okay, that 97.90 level, let's call it, right in here. That was the prior low. I can use that for my stop if by chance the market falls in here. So here are some different scenarios. And when I enter trades, what I'm looking for is what's the market doing? Does the stock have relative strength? Does the stock look good on a swing basis, which WYNN did look good on a swing basis, and that's one of the reasons that it's coming up on the searches. So if I get long at this particular level, I'm looking for a few things to happen. I'm buying it on the notion that the market's oversold, it's been starting to compress, and that I feel that there's a likelihood that the market is going to bounce and the stock is going to push higher. So here are some variables that keep me in the trade. Number one, Is the market doing what I expect it to? If the answer is yes, and the market has stopped going down, it does not have to rally at this point. It just needs to stop working against me. So if the market has stopped going down, fine, I'm going to stay in this trade. If the market makes a new low and the stock is starting to roll over, I've got to be very, very careful. And I need to stop out of that trade and say, hey, listen, I've been in the trade, market's falling apart. I don't need to be in this trade any longer. I'm going to stop out. Why? Because of the market. Just like I took profits up here. Why? With the stock charging higher and looking like a monster, why would I take profits up here? Because the market's falling apart. As soon as that move stalls and you're working against the market, you've got a headwind that you're fighting, get out. My God, take your profits, hope for a pullback, get in at a better level, just like we did. Okay, so number one reason that I might exit this trade is the market. It's falling apart and I'm on the wrong side, get the hay out. The second reason that I might get out of the trade is for technical reasons. Remember that support level at 97.90 I showed you? Let's say that the market stabilizes, but the stock starts to roll over a little bit, and we're back through that 97.90 level. Get the heck out. It's actually started to lose some of its relative strength because the market is stable and the stock is rolling over and it's breaching a technical support level. So that would be what I would consider a technical stop. Another reason that I might get out is, let's say that the market has bounced a little bit, but the stock did not. Stock never found its sea legs. Stock all of a sudden just decided, I'm just not going to rally. I've lost my relative strength. That's another warning sign, and you need to get out of the stock. You need to get out of the trade because of relative strength. So those are primary reasons for getting out of the trade. Number one, the market. Number two, it's lost its relative strength. Okay, those are very, very important reasons. Number three, technical support has been breached. So let's say that the stock is grinding higher, okay, ticking higher, and now we can see the stock is really moving higher. Look at how the stock has performed here while the market is really getting nailed. So let's say the stock is ticking higher and the market starts to flatten out. It's been going down, but it's flattening out. As long as I can stay in that trade and continue to move up my stops, I don't want to lose a lot of the money that I have in it. But man, if I ever get that little bounce that we talked about, this thing's going to make a new high for the day. It's going to be off to the races. So I also want to mention that since we are trading against the market and because the ranges have been so narrow, you have to set passive targets. You can't milk every possible nickel out of a trade. I'll also say that early in the day, the first 2-3 hours, that's when I make 90% of my money. Once I get past that first 2-3 hours, I start trimming my size back because the moves are much more random. Most days, you just get a market that chops back and forth. That's no good at all because the stock doesn't know what it wants to do. The market makers are just basically moving the stock back and forth, or perhaps you get an asset manager who has some size to move. They come in and buy or they come in and sell. So the stock really loses any kind of rhythm once you get more than 3 hours into the trading day. Now today, we've actually got very, very good price movement in the overall market, and you can see now we're down 23 points. You've kind of reached the point of no return on the market where you start hitting air pockets in here. Once you get down about 12, 13 points, then all of a sudden asset managers start pulling bids and they go, hey, listen, let's just see how heavy the selling pressure is. And they pull their bids. Bullish speculators need to get out. Perhaps there's some profit taking. all of a sudden people are trying to hit bids that are out there, and those bids are very, very small, and then you get a big air pocket like this. So right now, though, you can see the advantage of being in win. Market continues to be down. Stock is actually holding up very, very well. If we do get a late day market bounce, this is probably going to be a gem of a trade. And if you get a chance to buy it again right in this level right here, then that'll probably be a very, very nice entry point for a late day possible bounce. And one other reason that we would get out of a trade is if the stock just simply starts to lose its momentum, and that's when you know that it's time to get out and take profits. I didn't mention another uh, stop of mine, and that is time. So let's say that I get in on the stock right in here, and let's say that the market stopped going down. Okay, let's say the market finds support, but the market just starts to flatline in here. And let's say that the stock also starts to flatline. And let's say that I was looking for a bounce to happen in the next 10 minutes, but the bounce never materializes. From my perspective, my entry has to be perfect. Every minute that I'm in that trade, when what I expected to happen doesn't unfold, my probability of success continues to dwindle. So my probability of success is somewhere around the 80 percentile. I win on 80% of my trades. My trades are, I have much bigger winners than I have losers. So the key is to make sure that I'm always targeting that 80% level. Well, every minute that ticks by when the market is flatlining, every minute that ticks by when the stock is flatlining, my probability of success goes down because I thought the market was going to rebound. I thought the stock was going to rebound, and it didn't happen. So after 10, 15 minutes, I've got to really start wondering, why do I want to be in this trade? I can always get back in, but now I just have pure risk because the market could just whoop, drop right down. The stock could just, the bottom could drop right out. Well, why don't I wait to see what the stock is going to do since it's flatlining and just go to the sidelines? Maybe I made a little bit of money on it. Maybe I broke even on the trade. That often happens to me. I usually try and make a penny on every trade so I can more than cover my commissions. But when you're flatlining and you're going nowhere, get out. You entered the trade because you were expecting something to happen very quickly, and it did not happen. So, in effect, you're wrong. Get out of the trade, look to get into another one that's moving well for you. So, there you go. Market's starting to stall out here as far as falling. Look what the stock is doing. Inch, 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 inch. It's just trying to nudge, nudge, nudge higher. Why? Because there are buyers lined up. They want to be in this name today. And they're going to take out that high. If we get any kind of market bounce, you'll see this stock above 99.50. So again, it's November 1st. If you want to test my theory, follow what Win is going to do today, follow what the market's going to do today. These are the types of lessons that I teach every day in my chat room. Let me bring my chat room over so that you can see that legitimately I was teaching this to my members. And so I'm going to go back in time. I was already done for the trading day. I just hung out because I wanted to see if I could find something for members, although I told them to trim their size. So here at almost noon, just had some conversations about indicators, oscillators, so forth and so on. And at 12 o'clock, I said, hey, Win looks good. If you're looking for a play on the market bounce, wait for the market to spend more time above the low. That would tell me that the market is starting to compress and it could very well reverse, and then buy Win. If the market breaks the low of the day, get the hell out of Win. That would be a market stop. So here was my lesson. Should be able to click on it, Now you'll be able to see it in the video. And again, here you go. There was that horizontal support level that the stock got right back above, and talked about how the market was really, really down and why I would consider trying to time a market bounce. And here are exactly the instructions that I just mentioned to you. So if the stock does not bounce right away, if the market doesn't bounce right away, stock rallies, stick with the trade. I'm not going to reiterate all of this, and it's in the video, so you can pause the video and you can read these different points and you can study this chart. That is how we day trade. And so you can see here, offering win 98.75. Talked about if the stock rallied $1, I don't care. I was in it for 35 cents. I just wanted to make a nice quick trade. I'm not normally a scalper, but in this sideways market, you almost have to be. We're making money consistently every day. Stocks that were up today are down tomorrow. The market was up today, it's down tomorrow. There's absolutely no rhythm, there's no trend. You can't swing trade this market. We'd love to swing trade it, we just can't do it right now. So what are we doing? We're making a lot of money day trading. And so there you see my profit of 35 cents on the trade during the lesson. This list is gold. And guess what's at the top of the list? Win. We've seen how strong it is. When you click on the symbol, you get the intraday real-time chart, and you can scroll down, and then you can also see the longer-term chart on Win. Win is currently at $99, so it's eclipsed these major moving averages. It's right up in here today. So it's gotten through some horizontal levels. Everything we do in the chat room, everything that we trade follows a specific pattern. If you want to go and see more of my lessons, you can go into my tutorial section, learn the pattern that we trade. I have systems that I've developed over the course of many, many years. It doesn't get any better than this list right here. And there's a bearish list as well. And if I looked at some of these, man, would you see some big winners today. Well, you can see the P&L is based on the entry time, the first time that the stock hit the list. So you have the entry time and you've got your P&L since the stock has hit our list. And the same is true for the bullish side. Now, even though the market's been down, 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 down all day, you'll see that if you netted all of these trades out, we're still up. Got a lot of little losers right in here, and then bam, $62, 62-cent winner, $1.77 winner. So our bullish trades are still up, even in this very, very weak market, because we trade relative strength and we're able to identify it within the overall market. And we also identify relative weakness, and we've got huge profits on this side of the ledger. So if you haven't taken my trial, I hope you do. I'll teach you how to trade this. We've got members that have been on board for years. When you do take the trial, I urge you, go in and talk to them. Ask them how they're doing. Ask them if this system works. I think you'll find that this is easy to learn. It just takes some practice. So I hope to have you on board, and I hope this lesson, even if you don't sign up for the free trial, even if you don't become a member, I hope what I've just shown you helps you become a better day trader. Thank you.